I want to make sure that everybody has a good understanding of what non-QM is about. Because my gosh, you know, it's been quite a year, right? 2020 has challenged us all. So, you know, some of where non-QM is really going to come into play going forward is this year. I mean, it's always been around. It's always been a nice alternative to have for your borrowers. But with this year, because of COVID, oh my gosh, we've got, you know, it's one agency got really busy this year, right? And most of the lenders who are doing non-QM early all had to stop or go on hold. So it's been a challenge for the non-QM lenders. But as you see, it's all coming back with a vengeance, and we're glad we are back. It's, you know, this 2020 rather has really hurt the self-employed borrowers because of the business being shut down. So they're really going to need some help and your guys' assistance as we go forward into 2021. A lot of people lost their jobs, were laid off. Housing pricing, look at what the market's done. It's rising. You're seeing values. You're seeing the bidding wars happen again. So, you know, if you want a property, you really need to get your borrowers pre-qualified ahead of time. So when they do find something, they can get right in and you can put that offer in, because it's more frustrating if you've ever tried to buy a house and getting a bidding war, or there's 5 offers in front of you. So we can all agree this has just been a crazy year for this nation. And, you know, if anybody's been in the mortgage industry, of course, we always bounce back. So we are still in the game. So what is a non-QM loan versus a QM loan? You know, people used to think non-QM were bad loans or the old subprime, which is not the case at all. A QM loan, or a qualified loan, is a loan that follows agency underwriting guidelines. So your DU and LP, and then also, you know, Fannie, Freddie, things like that, and FHA, VA are all considered QM or qualified loans. Now, a non-QM loan still qualifies the borrower. So you're still going to need that ability to repay. The ATR still needs to be in place on a non-QM loan. But what the non-QM lenders do is we allow for different methods of proving income. You know, that's the bank statements and maybe 1-year income. We don't have to play in such a strict guidelines as agency and QM loans. Who can you get a non-QM loan for? You know, and I always stress the fact a non-QM loan is just like a QM loan. It's the same borrowers, the same documents, the same paperwork. There's really no difference. A loan is a loan, but we just look at it different. So anyone who doesn't meet agency guidelines, so maybe it's a DTI issue, a loan amount issue, anything that's kicking you out of agency is a great non-QM borrower. Or you're finding borrowers that want to step out of that non-QM, you know, that are great A-paper borrowers that maybe would like to use alternative methods to prove their income. They maybe don't want mortgage insurance. Maybe they've got some, you know, recent credit things that really don't make them a bad borrower, but might be making it a little more difficult to go the agency route, or credit score, or the best one, there's a real fun one, is they want to start purchasing investment property, which is a great time to do that. But, you know, one, they might not fit Fannie Freddie guidelines for buying investment properties, or want to try to do it quickly and maybe not use income and try to do a debt service coverage. So let's look at those borrowers and how you can help them, you know, or you know, pick them out of your pipeline, or maybe start marketing to them. So what are non-QM borrowers looking for? Oh, they're pretty much looking for anything in A-paper, but they're self-employed and they are seeking cash flow-based income solutions instead of tax returns or you know, statements like that. You might have somebody that has assets that would like to use those, and they're looking for interest only. Agency really hasn't come back with that. I mentioned the investment properties. They want flexible and innovative ways to maybe start purchasing investment properties. Larger loan limits, this is a big one. You know, you get into jumbo. Jumbo is very restrictive on not only guidelines, but, you know, reserve requirements and things like that. We like, you know, non-QM tends to allow the higher DTIs or shorter alt-doc products. So maybe that 1 year versus 2 years tax returns. The no-doc investment loans, meaning you're going to use debt service coverage. So we're not looking at income to qualify your borrower. We're looking at that property to cash flow, larger cash out limits. Typically non-QM, maybe I know borrowers looking to pull $1 million or $700,000, typically out of the range of agencies' cash out limits. We want a little more flexible guidelines as far as risk-based pricing, with maybe, you know, especially with what's going on now, you guys, you know, that people have gone into forbearances or things like that. Even though that's helping people out now, it's still going to, when you get your credit report and you see somebody went into forbearance, agency and everybody's going to start looking at that difference in the next 6 or 7 months. So that's something to think about when you're looking for a borrower that's been struggling a little bit this year and maybe they're going to want to refi. It's nice that everybody's helped them out to get through this time, but it is going to affect their credit. So, you know, non-QM borrowers are looking for solutions. It's a solution for their predicament they're in now or their goals for the future. And the other thing I want to bring up about non-QM loans is that I mean, you can get a 30-year fix, but it's not a loan you're going to keep these borrowers in for years. Typically, it's a shorter term, maybe year and a half, or even less. You're helping that borrower out of a situation. So you're going to put them into a non-QM. And then once that borrower situation changes, and that could be paying off debt to lower that DTI, or, you know, seasoning their job a little bit. Maybe they don't have quite that 2 years on a tax return for self-employment. Whatever that case may be, that will season out, and then you'll be able to go back to your client and say, okay, let's now get you in to an agency or a jumbo loan or FHA. Whatever the case may be, you will be able to offer them, hopefully, into a QM loan. So these are just great solutions to help your borrower out at the time, and then letting them know, I'm going to be here for you when we're ready to get you back into an agency loan. So some statistics, and this is interesting. There's still 28.2 million borrowers that are self-employed in the United States. So what are you looking at this for? That's great for a bank statement program. Okay, a lot of people are self-employed, and as I mentioned, a lot of people have been hurt this last year. 30% of the population still has lower scores, less than a 650. This is huge. 43 million families still rent. They're still trying to get into their first home and maybe can't get agency for some of the reasons we recently spoke about. So we've got a lot of people renting knowing they want the American dream to buy their first home, or they want to buy an investment property. This is great too. 83.1 million are still millennials. You know, a lot of them are still living at home. They're waiting for that opportunity to finally buy a home, get them out of the house of mom and dad. These are a great marketing area where to go to start helping those millennials. Or on that flip side, you've got 71.6 million people that are baby boomers. You know, they've gone through their kids, they're getting ready to retire, they're selling current homes, maybe buying down, or they're gonna start looking for investment properties, but they might be retiring on fixed incomes, but they have assets. So these are great borrowers to look for, maybe on the asset product or for the investment property. And then also going forward, how many people will still be recovering from what everybody's gone through this year? So, you know, we want you to be able to help them and have solutions for them going forward. So real quick, types. Self-employed, great borrowers for non-QM. They're, they can use cash flow from their business. We're going to look at business bank statements versus looking at tax returns to qualify. Okay, everybody knows you write off, expenses on your tax returns because you want to get into a lesser tax bracket. But if you look at their tax returns, they got great cash flow going on. Lenders look for deposits, then we deduct expenses, and it depending on what type of business they're in is going to dictate their expense factor to produce that qualifying income. The nice part is you have that option of using personal statements or business, or a combination of the both. We're really looking for the best way to highlight your borrowers in their best light. Okay, a lot of times they're using two accounts. Now, also, you've got the 1099 borrowers. These are borrowers that are 1099 for their employer, which means they are not paying their own taxes and insurance, right? So you've got 1099 borrowers with minimal expenses. So there's times we can give them all of their money or just apply a small expense factor. So these borrowers are great to use tax returns as well, or, excuse me, bank statements, or just looking at their 1099, okay? So we also have your prime borrowers. These are your A paper borrowers. These are your great agencies, but they are looking for something else. The biggest thing we find are loan amounts. They want to go outside of agency high balance, okay? They want to go through jumbo, but they don't want to use, to be with the strict jumbo guidelines. They might have higher DTI ratios than jumbo lenders, require. Typically, you're looking in the 40s for any jumbo lender. We'll go up to 50, or non-QM loans typically go a little higher. And then with these borrowers, also you might have programs using that asset as a primary source of supplemental income. So you can use assets, and then also maybe if they're still working and you've got W-2 or self-employed income, you can use the combination of the both. So those are your great prime borrowers that are just stepping outside agency for their solution of what they would like to do. Now you've got your near or non-prime borrowers, and this might be somebody that's had a recent credit event, or you've got 2 years for foreclosures going into FHA or VA. You might have somebody, I've seen for somebody that had foreclosure but a great score, but it still kicks them out of agency. So that's where you're looking for these kind of borrowers that comes across on your credit report. 2 more borrowers are your asset rich. Those are the borrowers on a fixed income. They could be retired. They might just be working part-time jobs, but they have assets as loan options with non-QM. All occupancy types are available on this on the asset base. So say you want to buy an investment or a second home, you can use your assets to do that. And they also can be combined with full doc income sources, as I mentioned earlier. So you might have some money in the bank, but then you also have a small job and maybe the assets aren't quite getting you to your DTI requirement. You can use those additional sources of the income to help you get to that back end. So this is another really great product for, like I said, borrowers that are retired or your baby boomers. Now you've got your investors. These are a great pool of people to market to. They're a great potential because they have the convenience factor of qualifying without providing personal income. They want to buy another investment property, but this borrower might have 15 properties already. Agency has a minimum of how many properties a borrower can own, or they just don't want to document all that income. So debt service coverage is a great product for those. It uses, as I mentioned, the debt service coverage loans use properties' cash flow or their rents to cover that mortgage payment. And it's a great for investors who need to obtain financing on multiple transactions annually, so they can, buy and then sell that and buy another home. So great product on a non-QM base for borrowers that are looking to buy investor properties. And then the last one I brought up was the millennials. 45% of all home buyers in 2019 have been millennials. The main challenge for them has been affordability. 4 million Americans will be turning 30 this year and are taking up to half of the mortgages for next year. So a great pool of borrowers that are getting ready to get into the market. The other end are that 39 plus. They'll be moving to the suburbs, maybe getting out of the city. They're ready to starting a family, etc. So non-prime loans, key features that work for them would be allowing student credit debt with higher DTIs. They're still carrying DTI or student loans. 20% down options with non-occupant co-borrowers are allowed. Lower score minimum for jumbo loan amounts. They make good money, they can get in there, but we allow it for some lower scores. It's a great education and prospecting opportunity for you all. And then entry-level housing and builder confidence is up. You'll find that builders are now building a lot more, first-time home buyers or more affordable housing, and it's growing according to that National Realtors Association. So housing starts are up. It's looking good for our millennials getting into properties easier, okay? So great types of non-QM borrowers. We've got foreign nationals. 3 of our products allow for foreign nationals. They're also a great marketing tool if you're into, if you have a good a good community that has foreign nationals. The non-QM allows using letters from their employers versus having to document the income. As long as it's a CPA, document their income, and the asset programs also available for foreign nationals. So foreign nationals that have funds in their country of origin, they do not need to liquidate them to bring it over. We can document there and use that to qualify. So really another area that you can look for non-QM loans. And then also, of course, what's one of your best options is your existing pipeline. If you have a loan that's structured under DU and LP and you receive either an ineligible or a referred caution, or it's a jumbo loan that's not meeting the stricter jumbo guidelines, you can potentially use a non-QM loan there to help them, once again, get into the property, let them have a higher DTI at the time, get that house they want, or refi that house, pull the cash out, pay off debt, whatever that case may be. So you can really work your existing pipeline into some non-QM loans. So hopefully that gave you an idea. You'll see it's the full gamut of borrowers that qualify for a non-QM loan, right? But where do you find them? One, your pipeline is the easiest place to go. You've got a current pipeline, always go through your pipeline, revisit past clients that, unfortunately you might have told them, hey, I can't help you, but let's look 6 months down the road. Maybe you'll be able to do something quicker. But one, market to your community. I'm strong as play in your backyard. Obtain lists of businesses in your area. A lot of times you can pull all the people that are self-employed in your community. Look for your Chamber of Commerce is a great source for self-employed borrowers. So that way you can, see if they're interested in getting a bank statement loan versus trying to use tax returns. Churches and schools offer online newsletters that, you'd be surprised, especially now that a lot of people are home. Our technology has boomed. You'll find a lot of online newsletters and publications that you can get into. Of course, your realtor partners, the strongest, you guys are sometimes hitting the streets, but they're always out there. They're always talking to borrowers, with open houses. Make sure they know that you have non-QM loans. So if somebody happens to say, or speaking to the realtor and let them know something's happened in the past or they've been struggling, whatever the case may be, this is a great outlet to find non-QMs. Let them know. Get these guys educated. We will do presentations to your realtor partners on your behalf. So if you have a great realtor group and you'd like us to do a presentation on our product, we will do it on your behalf. Bulletin boards, anything like that, advertising using Sprouts flyers, which I'm going to go to, that are available to you free of charge, but there's no message of sprouting. It's going to be all white labeled to your company and everything. You're just going to take our product and put your information on it, place them around, put them out in your area on bulletin boards, whatever the case may be. Investor groups, great area to look for investors. We've got that great investor product. If you can get in and do a presentation or attend one of their meetings or somehow even on Zoom meetings now, do that. Of course, social media, marketing there is huge. Print collateral, I mentioned our flyers. This is a great source, everybody, for, all kinds of borrowers. You're going to find hard money loans. They don't want to keep their borrowers on their books anymore. Hard money loans are short term, 1 or 2 years. And if you know a hard money loan lender or somebody, we all know people in our industry, they've got somebody that's on their books that they really want off, but, they still might be struggling with DTI, or, you've got a borrower, you can refi them out of that hard money loan. It's a great potential to have somebody in the hard money that can flip you borrowers that are non-QM loans look fabulous to hard money loans. They're, interest rate and the reserves and all that. Purchase leads from lead generating companies. If you're good at that, you can buy leads, you can market to them. And then always, of course, you guys know this, as loan officers, ask for referrals. Go back to your clients, and they all know, brothers and sisters, aunts and uncles, everybody is moving now. So always remember to ask for referrals. So other things that come along with non-QMs is the objections. Oh yeah, the rates are always so high, or something like that. And you have to remember, non-QM loans are risk-based loans. We're carrying a little more risk on them, but we also allow easier guidelines and things like that. So, rate. borrowers have a specific rate in mind, especially now because we're in the twos. But, you know, remind them that this is allowing them a solution for what they originally came from. They want to buy a house. How bad do you want to buy a house? Well, obviously, if you're not making it agency, do you want another option that you might have to live in for a year or so, and then we're going to get you out, okay? So remind them that this is giving them a solution to acquire their property. And it's really a bridge between agency and non-QM, and it's not that big anymore. You're going to find some of the non-QM loans that are very aggressively priced because you've got A-paper borrowers in this game. It's not the old subprime where you've got this bad borrower. You've got great borrowers that, one, as I mentioned earlier, they're going outside the agency for a reason, or they're just not quite meeting agency. Do the rent versus own. Right now, man, if you can get into a house, you want to get your borrower into the house. You've got home ownership rights. You've got that tax reduction now on your interest. You know, there's all these benefits for owning a home. You start gaining equity now. And with what pricing going up, you know, your borrowers are going to gain equity versus staying and renting and not jumping on that opportunity to get into a house. So explain the benefit explain the benefits of ownership. This is a great one. Also, payment versus rate. I've always told loan officers, please don't sell rate, sell payment. Show payment differences in rates and show them that many times the difference is negligible. So you've got an FHA loan. So on top of the FHA loan, you've got upfront MIP, you got monthly MIP. Same thing with VA. You've got an agency loan that anything over 80 now has mortgage insurance. So maybe you're paying 1.5 points higher on your interest rate, but once you add those additional adds to either your base loan amount or that monthly MI, you're going to find you might be paying $40 more a month more on a non-QM loan versus an agency loan. And that's the time you ask your borrower, is it worth $40 to get into a house? I would think the majority say yes. Or is it $40 to pay off $15,000 of your revolving debt? So that goal of the solution of what you're trying to do is typically overweighs the difference maybe in that rate or payment, okay? And once again, that two-loan conversion, meaning once again, this is temporary. You know, counsel your borrowers saying this is not permanent. We're going to get you in and we're going to get you out. So once you can, you know, highlight to them saying you're here to help, I'm going to be here a year later and we will get you into agency loan. So really easy overcoming those non-QM objections. So my final words when you're looking into non-QM, becoming better at being a non-QM, offering non-QM, is build a small but meaningful base of lenders and investors that you can depend on once you start to want to choose non-QM. This is key, you guys. Study and learn the products. Become an expert on non-QM. So when that opportunity comes around, you already know and you're thinking, oh my gosh, I think we can put you in a bank statement loan, or I have an asset product, or yes, Miss Millennial, we can start you building your investment portfolio without really having to use income. Start slow. You know, do a few loans, see how it goes, learn the ins and outs. You know, non-QM have some rules, agency has rules. Get to know what the non-QM lenders are looking for. So when you finally submit that loan, everybody, it's very important now, especially with turn times, to make sure you've got everything in that file that non-QM lender is going to be looking for. Okay, you don't want to go through the back and forth. So learn the ins and outs, learn what we're going to be looking for. So when your file comes in, it's good, and then develop confidence in your knowledge. So great final words. Okay. So what does Sprout have to offer in your non-QM? You're ready to go. You're kind of excited. I want to start learning about non-QM or get better at it or see what we have to offer. Of course, we have a bank statement product. We can use 12 or 24 months, personal or business, and then, of course, we have that 1099 option. So this is going to help you with your self-employed borrowers that aren't making it on their tax returns. We have two full doc. This E1 is an expanded jumbo. So this is kind of like your just miss A paper, and mostly it's going to be for loan amount. So this is our most aggressively priced product. It's literally in the threes, okay, low threes. It does need that 2 years income, so you're going to have to do 2 years tax returns or 2 years W-2, but here's that key, it goes up to $3 million. So this requires you be over agency loan limits, but it goes to 3. Then we have our J10, which is our select jumbo. It's the 1 year income. So there's your 1 year tax return, 1 year W-2, goes up to 4 million, a 50 back end, minimal reserves. So a great full doc for those borrowers that are looking to just use 1 year income. This is our asset depletion, where we're using assets. And the nice thing about our asset depletion, it's not the normal asset depletion you find in our industry now. You don't need $1.5 million in the bank to qualify. We look for your loan amount. So if you want to buy a $200,000 house, rental, primary, condo, whatever the case may be, we're only going to look for $220,000 in your bank account. Okay, not a lot of money, very attainable. But the nice part is we only divide that assets by 60, and we give you 100% of it. Here's that investor product that I was telling you about, the debt service coverage. We're just going to look to see that property cash flows, meaning we want your rent to be at least 15% over your mortgage payment. Pretty easy, okay? And there's tools to help you do that. You don't need to be a brainiac. We have calculators to help. And here's our foreign nationals. We allow foreign national on that select jumbo, the asset depletion, and of course, our investor product. So just a real quick highlight, everybody, on them. 12 or 24, we do not require a P&L on our bank statement products, which is really cool. You can buy all the occupancy types. We let you use all of our loan products, including interest only. So we have interest only on our 5 and 7. You could do 1 to 4 in condos, including non-warrantables and condo tells. So if you market into the East, Florida, and certain areas that have condo tells, it's a great marketing tool. The minimum score is 660 unless you're in New York. It's 680, but there's that generous DTI. We do not have a cash out limit. So this is for that borrower that wants to pull $700,000 cash out on their investment property. Absolutely fine. It goes up to 85% on a purchase rate and term. You can do cash out up to 75, and I mentioned it goes to 4 million. So your bank statement loan hopefully is going to be able to fit all of your self-employed borrowers that are looking to use their bank statement. Here's that E1. This is a little more stricter full doc loan. As I mentioned, your loan amount is typically kind of based on loan amount. Otherwise, you could go agency with these borrowers. So it has to be $1 over conforming or high balance loan limits. Okay. Very competitive rates. This is our most aggressively priced, but this is where the restrictions come in. It's only a 30-year fixed. You can have all the occupancy types. So if you wanted to buy a second home or an investment on it, we do not do non-warrantables on this product. There's that 660. It goes up to 90 on a purchase only. Okay. So you can buy 1 unit on a purchase only, but there's no MI in there. Okay. It does have cash out limits. It has a stricter DTI. You do need the 2 years. And if you want to do 2 to 4, you're at 80%. But this is your just miss agency loan. So then if they don't qualify for this, or, something's not missing, your condo might turn out to be a non-warrantable, you still have an option with the J10. But this is that nice 1 year, okay? 1 year income on steady sources, which means W-2 and tax returns. Now, say if you're a W-2 borrower, but you also have overtime and commission or something like that, they are going to look for 2-year history for that, and they're going to look at that. So just remember that if you have alternate or variable income, we are going to require 2-year history on that. But 660, 50, all the occupancy types. This one goes up to 85 on a purchase rate and term, no MI, all the property types, all of our products, 4-year seasoning on a major event. The E1, you need 7 years if you had a foreclosure. This is only 4 years. And actually, if you have only 2 years on a foreclosure, we allow you to go to 65. We do allow business purpose, where the E1, you have to take title in a person's name. This one, you can take title in an LLC or a corporation. You can do cash up to 80%, but we have no max out, and it goes to 4 million. So a great alternative to the E1. If the E1 doesn't work, you have this one. Here's our asset product that I told you about. It's a minimum requirement. It must be 110% of your loan amount. It's calculated on dividing your assets by 60 months, but the cool part is we give you 100% credit of all that asset counts. So if you have a 401k, and you're only 49 years old, so you're not agency retirement age, 59 and a half, but you still have a 401k, we're going to let you use 100% of that 401k. We're going to give you 100% of mutual funds, stocks, bonds, anything that has a dollar value, including life insurance policies. We give you 100% of that. So add all those up and divide it by 60. That's going to be your qualifying income. So we don't discount it, and we're not dividing it by 180 or greater. You get a bigger bang for your bucks. Plus, we're only looking for 110% over your loan amount. We'll go to 80 on a purchase rate and term, 75 cash out. These are all your acceptable assets, okay? Now, I told you can use this for a foreign national. So as long as they hold those in a foreign bank, we're going to go ahead and give that borrower 100% of their portfolio in their country of origin. Any TIN loans? No, James, we don't do I-10 loans. Foreign nationals either have to have a Social Security, or if they're legally here via an EAD and then they happen to have an I-10 number, then that's fine. But if they're just here on an I-10 and do not have that EAD, then we consider them foreign national, okay? Okay, so here's that lovely investor product I was telling you about. So the key here is we want those rents to be 15% more than your mortgage payment, okay? So as I mentioned, if you go to our website and you go under calculators, there's an Excel spreadsheet that you can just put onto your desktop or laptop or whatever the case may be, and it will figure out your cash flow for you so you don't have to sit and try to, know math. But anyway, so 15% more, a 1 to 4 condo, including non-warrantables. It's a 680 score on this one, but we'll go up to $3 million at 75% on a purchase. We'll do 70 cash out. All of our loan options, and the key here is this IO. So let's say you went in and picked a 7-year ARM, and you got what your payment's going to be, and then you've got your rents. And how you take your rents is you get your rents off of your appraisal, off that rent survey addendum that the appraiser puts in your appraisal. You use those rents, okay? The only thing you back out of that rent is taxes and insurance. We don't have you do 70% vacancy factor, anything like that. You get the full rents, you back out taxes and insurance, and if there's an HOA fee, and that's going to be your net rents, okay? Those net rents have to be at least 15% higher than your payment. Well, what happens if you don't quite have that 15%? You might be short $200. Go back up and use the interest-only option. So you'll know interest-only, you're going to cut off, $200 to $300 off of your principal or P&I, and now you just have an interest payment. So try that, and a lot of times that's just enough to get that property to cash flow. The nice part here is this is where the millennials come in. You don't have to have a previous landlord history, and you're not required to own a primary. So people still living with family members or renting can still buy investment properties. You may hold them in an LLC or corporation, so that's where your investors group come in. There is a 3-year prepay. This is the only product that we currently have a prepay on, okay? We do not allow you to buy it down or buy it out. But the nice part is these are considered business purpose loans. So we are not required to do TRID on them. So that's going to shorten those turn times because you're not waiting those 3 days and having to do disclosure. So once again, you can qualify that property on a fully amortized payment or an IO. Very cool. So you've got all these products in your head, and you're like, oh my gosh, Bonnie, I have no clue what to do. So we have a couple tools that are really, really cool to help you. First one is go to sprouthosel.com. This is what our website looks like. You'll see up here, it's a tab called I Qualify. And also up here, Loan Tools is where you're going to look for the documents to help you with those sheets I told you about, the Excel spreadsheet. You can also get those there. So you're going to go to I Qualify. Very simple. Fill in all the drop down. The 2 parts I want you to be aware of is reserves. The majority of our reserves require 6 months. Okay, we need 6 months of reserves. So please put 6 months here, and then be cognizant of your employment type and your doc type. Make sure these match. Don't have self-employed and then you W-2. Now, there is a case where you have a self-employed borrower who does W-2 themselves, but we're going to use bank statements, and that might be where there's personal bank statements come in because we're going to show that they're W-2'd, but still put bank statements here, okay? Or if you're W-2'd, make sure you have W-2 and not bank statements. So you're going to just fill all this in, hit submit. What the computer's going to do is bring up a product for you that your scenario fits, okay? You can also get pricing on here. So as long as you're approved with Sprout, we will get pricing for you. You can also email this program summary to yourself. There's great options. So iQualify provides instant answers. It not only shows you the program, but it will also give you an alternative program. And if something doesn't quite match here, we also give you a near miss. And it will tell you what you're not hitting. So say your DTI is too high. It will say, hey, you're just a little over your DTI. You could qualify for the jumbo full doc, okay? You can often all this too. You can get a PDF. You can do a pre-qual on it. Just is a great tool for you 24/7. Not sure of our products, not sure if your borrower is going to fit. This tool is always there for you, okay? So then once you kind of designate that, you can reach out to your account executive and say, hey, I think I have a non-QM loan. They will guide you through the rest of the process. And then also there's the loan scenario team at Sprout. Say you have your bank statements. You send your bank statements into the loan scenario team. They're going to do your income for you. We don't want you to do your income. It's overwhelming, especially if you're doing 24 months. Let us do the work and get back to you with your income, okay? So a lot of great tools at Sprout to help you guide you through here. Now, I mentioned the marketing store. Marketing store, you can expand your reach. It's access-free marketing tools to help you grow your non-QM, okay? So the marketing store, you'll see here, you can shop marketing collaterals. There's also promotion items on there. So how do you access the marketing store? It's easy to use. You instantly download personalized flyers 24/7, so it doesn't have to be 8 to 5. You can add your company logo and your headshot. As I mentioned, they're free. They'll PDF it to you. You can go ahead and print it yourself or download it. We do have professional printing available, but we're a great marketing partner. It's a secure access, and then also there's promo items on there if you wanted to download your company logo. So how do you get this out to your team? You know, how do you get it to your community? Please use our marketing store. It's free of charge to you. How do you get started? You get user credentials. So you're going to reach out to your account executive. They will hook you up with the marketing store. They're different than our website, okay? And what you're going to do is you're going to make sure we have your logo, your website, your email, your phone number, your headshot, whatever the case may be. We need that uploaded into the system at the Sprouts marketing store. When you order your flyers, all of your information is on there. There's no reference of Sprout whatsoever, okay? User credentials cannot be shared, so loan officers, everybody, you have to get your own because we're going to use your information. So if you share your information with another loan officer, your information is going to go on the flyer, but that's okay. So we want, here's for the image files information on there. Great marketing tool, very powerful. So you've got iQualify and you've got the marketing store, okay? This is what those personalized flyers kind of look like. It looks like your company, your logo is going to go here. Hey, self-employed borrowers, here's for higher valued. Maybe this might be the E1 loan for higher value homes, but they're very professionally done flyers. They're really nice. So you'll see you can do commercial flyers, partner marketing. So say if you have realtors you work with, you can do that. Here's the overview of all the flyers. All of our programs have multiple flyers to pick from, and this is kind of what the website looks like. So how do you request? Access provided to approved wholesale brokers and correspondent lenders. If you're interested, please let me know or reach out to your account executive and they can get you your credentials. And then please make sure we have your headshot and company logos to your AE. Marketing made easy. Here is their, if you have questions to them, please email the marketing store at sproutmortgage.com. That is the end of my presentation. So thank you so much. I know it's the end of the month, so you're busy. I hope this, one, answered questions on what a non-QM loan is, or two, where do you find these borrowers? How do I get to them? And three, what does Sprout have to offer me with the non-QM loan? So I'm hoping a lot of agency people were on here maybe, and you want to start looking into the non-QM realm, or as I said, you're currently doing non-QM and you want to up your up your goal, up your business, and just get more income coming in. So thank you again. If anybody has any questions, I'm going to hang on the line here a little bit, so I'll answer your questions. So please feel free to put them in the question box. If you did not use your email to register, please give me your email name in that question so I can send you a copy of this presentation along with the audio version. So once again, you guys stay safe. Thank you for participating, and please join us next week for our Wednesday webinar. And have a great end of the month. James, please reach out to Dennis Kelly. He is your account executive. If you don't know how to get a hold of him, I can email you with his information to get that to you so you know how to submit loans with your company. Oh, you have been reaching out? Okay, James, I will get that information to you, okay? I will get that to you. I will have somebody call you, yes. Thanks, James. Oh. Farad, yes, I'm going to send this recording out with a PDF of the presentation. So I will have your email and I will send this out to you. So thank you for attending. All right, everybody. Thanks again for joining. Once again, have a great end of the month and stay safe. And hopefully we'll see you next Wednesday for Wednesday webinar.